You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again to do a little options education. Yes, it is time once again for Options Bootcamp, the premier options educational program. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, ever exciting Options Insider Radio Network, coming at you here on Education Wednesday to hold court on some fun educational topics. Of course, if you're having fun, if you're enjoying what you're listening to, I see the numbers. I know you folks are enjoying it. More of you discovering it all the time. No small part of that, of course, due to those of you who do take the time to rate and review it out there, just like easily did this week. 2 E's, though. Eezily. That's an interesting spelling. Easily says, still not sure what I'm doing. I think I'm getting the hang of it thanks to this show. Oh, I started listening in January of 21. So you're a meme stock baby here on the options front. Well, welcome to the show. Welcome to all of you out there who joined even post January of 21. That's crazy to think that's already 2 years ago, but that's a lifetime in the world of options. We've seen a lot going on since then. So thanks to easily everyone else who takes the time out there to rate and review. It really does help new people continue to discover the show as this show is moving on into its second decade here. And of course, if you want even more in your lives, if you just listen to Bootcamp, first off, you're missing out on just about everything else we do here on the network. So a whole bunch of shows coming at you, nearly a dozen on the old on-demand side. And then if you want even more in your lives, and who can blame you these days? These markets are, I think, to put it mildly, crazy. But then you want to go above and beyond. You want to go to theoptionsinsider.com/pro. That's the place to go for even more great exclusive content. I just checked the other day, nearly 200 hours worth of content. So you can go for days, nigh weeks, without a bathroom break, without even stopping to eat, just listening straight through to great exclusive pro content over there. Of course, live access to this, everything else we do. Giveaways are coming up. In fact, Dan, I don't know, maybe we'll do it later today. Maybe we can get all our ducks in a row and fire up the random number generator. Maybe we shall do it today. Do the giveaway for the February Pro Trading Crate. I'm kind of excited. We just gave one away. I think Pariah Pans was just tweeting about what he got in his stuff. So if you want to be the next one to win, listeners, get your name in the hat over there at theoptionsinsider.com/pro. All right. And joining me on the old Options Bootcamp drill instructor proving ground yet again, our old friend, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program, sir.
Well, hey, Mark, it's good to be back. And yeah, good to be back and excited to talk about the things we have to talk about.
And you know what? You did such a good job last time, Dan. And it just so happens today is the first, so it falls right on our bootcamp recording day that guess what? You get to do it again. It is time to give away the Pro Trading Crate for February. You think you can handle that again, sir? You did it well last time.
That sounds great, man. Let's do it.
All right, here we go. While you were talking, I had our producers fire up the old random number generator. All right, it is flashing now, listeners. All of your member numbers are all flashing before my eyes here right now. And when Dan tells me to stop, I will stop. And then we shall choose the winner for the much lauded, much anticipated February Pro Trading Crate. All right, Dan, I've hit the button there flashing. You tell me, sir, when to stop.
All right, ready, stay.
I almost hit the button. You almost picked the wrong person. And they would have been like, wait a minute, I don't win. I would have to give away 2 now because of you. See the shenanigans? That's why I call you the black-hatted one, sir.
And shop. I do this with my dogs. Who's a good boy? Mark, you're a good boy. Okay, stop.
All right, there we go. All right, now we have a real number, listeners. So if you were teased just like I was by Dan, send your hate mail. Dan@markettaker.com. All right, here we go. That number, that's one of our newer listeners, one of our newer members. That is good old Stego, Stegosaurus himself. Steve Sosnick was just laughing about your handle yesterday on the show, so he wanted to avoid your spiky tail. So there we go, Stegosaurus. Congratulations. I love your handle. You definitely get handle of the week here for the pro side. So Stego, congratulations to you. And you can thank Dan. I'm sure your envelope's in the mail, Mr. Dan. And speaking of things in the mail, your Pro Trading Crate will be in the mail soon, Stego. Look for an email from our producers. They will ask you some questions, your sizes, some of your educational preferences. And then we'll go on from there right on into the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. Dan, I'm not sure if you shipped anything lately, but I saw how much our producers are spending to ship out these Pro Trading Crates the other day. And I think, to put it mildly, a little bit surprised. The rates have gone up a little bit, sir. So I guess we really like our pro members is what I'm trying to say, sir.
Oh, man, I had to ship a letter yesterday. I had to, it's Friday. So a letter, like a single 8.5 by 11 piece of paper in an envelope. And the post office was closed. It was going to be $23 at the post office.
$23?
Oh, yeah. But it had to go out. Like, I go in there. Yeah. I go in there at like 5:05 and they're like, oh, it's got to be before 5 o'clock. Otherwise, it's not overnight. I'm like, are you kidding me? So $23. But then I go to FedEx and it was $45. Yeah. So there's that.
So I think we both discovered we're in the wrong business. We should be shipping things right now as opposed to doing options. So that's where the money is. Shipping letters and apparently Pro Trading Crates. That's where all the money is.
And handling.
Yes, and the handling. Don't forget the handling out there. Well, let's distract ourselves with talk of logistical woes, Dan. I know you've been saving up for a while now. I know you've been chatting with your mentees over there in the land of MTM. They've been hitting you up, peppering you with all sorts of crazy questions. What would you say is your MTM question of the week, sir?
Somebody was asking me recently, and I'm going to combine the question with just some real world experience here, how often I do research, which is a great question. And, I would say that like...
You told them never and hung up the phone very quickly?
Yeah.
And laughed maniacally at them?
Right. No different than normal. So, if I'm going to give advice, I would say it's sort of like, personal to the individual. Like some people who have plenty of time, like, hey, spend a half hour every morning or, 45 minutes every morning. You have a busy schedule. Hey, maybe it has to be once a month or, maybe once a week on Saturday mornings or Sunday mornings. But for me, one of the things that I do is with our option rate or short squeeze finder, like I actually curate the basket of stocks that the scanning software scans. And I got a little behind schedule on that. So I was doing it today and, doing my research on that. It's been like about a 4-hour process. And kind of one of the fun things about it is that I end up like finding stocks that I like maybe to just like invest in, throw in the old IRA, because, you might be looking for one thing, but you find another thing. And that's one of the coolest things about this whole job is just, uncovering something and using your brain to figure something out. And, it's where hard work meets luck,
We do our own research here, Dan. It's usually in the form of audience surveys. Let's check out the one we had recently here. I'll pay off the results from that. Then we'll get into the one that is flying fast and furious this week, listeners. You guys can always play along. At Options on Twitter is the place to go for our question of the week. Last week, we asked you a fun one. It was a shortened holiday trading week last week, obviously, so we messing around a little bit, having some fun. Apple, a very contentious name. A lot of you love it. Some of you hate it. We said, hey, Apple's in many of your portfolios had a strong rally, comes 52-week low of 124.17, but still got a way to go to get back to its 52-week high of 179.61. So quite simply, we asked you last week, which one will it hit first, that low or that high? Mr. Dan, which way do you think our audience went, sir?
Oh, so let's see. I would say yes.
So they were bullish. They were going for the high?
Yeah.
That would be wrong, sir. Almost 80%. 77.3% saying no. They're going to 52-week low, sir. It's going to hit first. So 124.17. Only 22.7% going the optimistic route. Looking a little better today. Apple selling off another $1.50, trading right around 145 right now, listeners. So about 20 odd handles away from that 52-week low, and obviously much more from the high. So yeah, our audience a little bit bearish, Mr. Dan. Does that surprise you?
I don't know. I was just kind of doing a wag when you first asked me, but no, I guess it does not surprise me. In our daily video that I send out, I've been talking about just, a lot of the, you get this little bit of good news and people grab onto this and the market rallies, but you have like all these people at JP Morgan and all these like smart voices out there saying, hey man, be careful. Like we're expecting a pullback. So I don't know. I feel like the people who are paying really close attention, might be a little more bearish. Yeah.
All right, let's get out to the question of the week this week, and it's a contentious one. Mr. Dan, this week we're asking you folks quite simply, everyone's all obsessed with this zero DTE trading phenomenon. You guys are full of questions about it. We're talking about it on a lot of our shows. So we're going straight to the point this week. Is the zero DTE explosion in SPX, is that increasing intraday volatility? Yes or no? Quite simple, straight to the point. Mr. Dan, what is your thought, and what do you think our audience is voting for, sir?
I think that it's something that took hold for a reasonably good reason. And I think that the more people learn about it and see the opportunity that's there from listening to our show or others, I think it's just going to continue increasing, honestly.
Do you think it increases intraday volatility? You're saying yes.
Increases intraday volatility. I'm sorry. I was
giving me your Dan political answer.
Yeah, no, honestly, Mark, I was looking at the stock that I came across for the short squeezes, and I'm like, why the heck does this stock have so much short interest?
Are you rating again while we're talking? Are you in the mid-rating while we're talking again, sir?
No, okay. Anyway, hey, Mark, give me the question again. I'm sorry.
All right. Is zero DTE explosion in SPX, is it increasing intraday volatility? Yes or no?
No, I'm going to go as far as saying overall, no. I mean, possibly a smidge, but not really. Not with the fervor and demonization that we get from a lot of people. I think a lot of the 0-day DTE is far out of the money credit spreads or iron condors, which is definitely not increasing the intraday volatility.
Several people have made that point. There is a lot of premium harvesting going on in there. I think our audience is leaning no as well, or are they saying yes, Dan?
I think they're going to say no.
Our audience is giving you the big middle finger. They're saying yes. 63.6%, Dan. 36.4% saying no. Get over there, listeners. At Options is the place to go to make your voice heard. As of today, you got a couple of days left. This is our question of the week. It will expire at the end of the week. So get to At Options while the getting is good. Now, Dan, we're going to get out of our polls and go all the way back to Germany. Do you recall, John? We had a listener, was Ollie John. We had a listener from Germany, Dan, who wrote in recently on the show. There was that crazy tax issue. Remember that?
Oh, yeah, that's right. I do remember that. Yeah.
That was Ollie John, and he was writing in from the other Frankfurt, the real Frankfurt, some might say, the land of Lederhosen and Wiener Schnitzel and all sorts of All sorts of fun. Well, he heard our response and he wrote in with a follow-up. He said, "Hi, thanks for answering my question so quickly. It is indeed a weird tax law that the German investors are fighting against. Hence, the limit was raised from just 10,000 to 20,000 euros. But still much way to go." So he's talking about, that's your advice, Dan, was to kind of fight against it. It sounds like they have been, and they've been able to double it. It's still an insignificant amount, but it's better than 10,000, obviously. Yeah. So he also writes in to say, you like this, Dan. "I heard about Dan's planned journey to Oktoberfest. Since I lived in both cities of Frankfurt and Munich, I can offer free tourist guide services. However, I definitely won't wear the lederhosen." Oh, well, that kind of ruins the half the appeal right there. He says, "Dan, this is not a joke, but a real offer. Feel free to write an email to me about the dates, and I'll be happy to meet you and show you around in both of the cities." Wow. Just a teaser. We can start with the famous bull and bear statue in front of the Frankfurt Stock Exchange. Regards, Ali John. Look at that. What considerate listeners we have. They are willing to Sherpa you through Germany and through Oktoberfest just without the lederhosen, sir. What do you say?
Wow, Ali John, that's super cool, man. Thank you so much. That's awesome. Lots of love from, across the pond. I'll tell you what I do need. I need the reason I'm actually going to Berlin first, not Frankfurt. I'm going to run the Berlin Marathon, which is one of those challenges to myself that I made this year.
At the marathon, you have to stop every hour and chug a stein of beer. Is that how that works every mile?
Man, I hope not. I'm going to have my hands full just trying to finish that marathon. But so, I've got to have something to look forward to after that feat, right? So I've been looking at Oktoberfest, and you have to book like a tent, they have like these beer halls, I guess, you have to book a tent like months and months in advance. Like many of them are already booked. And if you do book one, like it's me and my wife going out there with another couple, me and the other guy are running the Berlin Marathon, but you have to book a table for 10 people. And so we don't have 10 people. So what are we going to do?
Well, now you got Ali John. So that's 5 right there. There you go. See, your list is growing.
All right. I hope you can eat a lot of half chickens and drink a lot of liters of beer, Ali John. We're going to need all the help we can get.
What a considerate audience. I know we have listeners all over the world. I never had them offer tourist guide before. So that is always pretty nice. We'll provide you with his email so you can contact him, Dan. You could arrange how many chickens he's going to have to eat and how many steins of beer. Have you ran a marathon before?
I did. I've run 3. I did the Chicago twice and the New York once. And, truth be told, I'm not fast, So I wanted to, and I haven't done one in several years now. And so I wanted to challenge myself and do one this year to kind of make me kick my own butt and get into shape. And that's what I'm doing.
Well, that is impressive, sir. The chugging the stein of beer every mile, that'll be even more challenging out there, I think. I do remember I was at Gibson's a few years ago. It was the day of the Chicago Marathon. People were treating themselves after having run the marathon to a Gibson steak, which first off, I can't imagine eating a whole steak after running 26 miles because I would probably be in the hospital. Still, that notion of all of that, just rich, fatty food, I couldn't do it. But B, they looked like zombies. They couldn't even walk. They had to drag themselves in. They were like slumped over at the table. So I don't know how much enjoying was going on. But it look like a bunch of the Army of the Dead with medals around their neck eating steaks. It was interesting out there. But hey, more power to you, sir, and your globe-trotting marathon obsession here. Speaking of follow-ups, we got another follow-up here. This was another question we had on our last show. Yield Hunter, he wanted to know what happens to the collateral you put aside for cash-secured puts. Can you earn money on it, or does the broker keep that? And we said it was kind of a broker-by-broker thing, but as it happens, we were just doing a pro Q&A with Steve Stosnick from IB yesterday. So Yield Hunter, we put your question to him for you. Just to see, I want to start nailing down the brokers on specifics on this, exactly what happens to your money, because, hey, it is your money, and it's a good question to ask. So we put it to them, and they said that IB does not keep any interest rate on that. They give all that interest to you. It's a fairly reasonable amount. I forgot what it was, somewhere around 4+%. So if you are using IB, who is a Yield Hunter, or if you're thinking about using IB, and you're concerned about what happens to that money you have to set aside for things like cash secured puts, there you go. At least IB not going to keep that money out there. And we talked also, does it vary by account size? And they said, no, they're pretty much going to let everyone out there have access to their funds. So that's a good thing to hear. We think more brokers should do that. It should be a no-brainer. You would think, hey, I'd rather that's my money I'm putting aside. I should get that interest on that money. But brokers get a little iffy sometimes on saying, that's my money. I want that interest there. So good to hear that at least IB is making it easy for you folks to go out there and do that. Let's go back to Alan. He's got a question for you, Dan. Alan says, does Dan trade 1x2 put spreads? He says, how would he typically go about trading those? Will he buy the at-the-money put first and wait for the stock to go down until he sells the 2 out-of-the-money puts? Does he put it on all at once? And then when it comes time to unwind it, will he take it all off, or does he just buy back the extra put and leave the 1x1 put spread on? All right, so Dan, a lot to unpack here with 1x2 ratio put spreads. Alan wants to know, first off, do you trade them? If so, how do you go about it? Do you kind of buy the whole thing at once, or do you kind of leg into them more of a momentum-based trade? And then once you put them on, how do you take it off, sir? A lot to unpack.
Whew, boy, we're unpacking up a storm over here, Mark. So I'll tell you, Alan, yes, I'll trade anything in concept, but it's not one of my main go-to strategies. We've spent a lot of work over the last 5 years at Market Taker developing very, very specific systems that are, tested and tried and true and have tools that help us do them well, which include credit spreads and time spreads and short squeezes. There's a momentum strategy. There's covered calls. Oh, and our earnings trade. Those 6 are the main ones that I trade. But do I ever trade 1x2 put spreads? Sure. I can't remember the last time I did one. So, talking about how I typically go about it is, for me, really a case by case basis sort of thing. I will say that, looking at this, Alan, the way you kind of propose, is this how I do it, where I buy the at-the-money put, would buy the at-the-money put first and then would sell the 2 out-of-the-money puts later? Probably I would do it at the same time, because when you lag in, when you leg into stuff like that, you run the risk of, being wrong in the short term and having to sell the out of the money puts at a worse price because the stock ended up going up a little bit and they're a little cheaper because of delta, or maybe it comes back, but it's 5 days later and now they're cheaper because of theta. So I typically don't like to mess around too much with legging. Truth be told, I do leg occasionally. In fact, I put on 2 trades this morning where I'm looking to get the second leg in, but there's a reason for it. They're strategic. So now I just gave you a lot to unpack, my friend. So there you go. I hope that helps.
Sounds like you don't do them a ton. What would be a scenario where you would consider doing a 1x2 put spread?
Well, the thing that's tricky about 1x2 put spreads is that you're basically taking a lot of risk to get a free put. You want the stock to go down to make money on your long put, but what typically people do is they sell 2 puts for half the price of the long put, so it's basically like a zero cost scenario. So you want the stock to go down, but if you're too right, you get really punished. So I guess that's the thing. I look for those opportunities where I am looking for a more controlled move, and I'm pretty confident, because there's a great deal of support a lot farther below, that it's not going to go down too much below a certain level. And you get a lot of forgiveness to the upside if you do it cash neutral, because you can't be wrong. Stock can go to the moon and you don't lose anything. I guess when I do really leverage directional trades like that, I tend to look more towards time spreads. I've been really into directional time spreads, in theory, at least lately, because they're really a lot more powerful than one might let on to.
Yeah, if you're going to do these ratios, you got to at least be comfortable picking up the stock at that short leg. That's your introductory analysis you have to do. Then there's all sorts of other fun. We talked about 1x2s many times on this show, but also on other shows. We do them. Actually, on Options Oddities, it's a popular one. We kind of use them to leg into some underlyings at more attractive levels sometimes. Getting them for a credit is always nice if you can do it. Take advantage of some nice, hefty put skew on names that make it more attractive. There's a lot that goes into it. Who wrote that in? Alan. But yeah, it's an interesting strategy. Maybe we need to do another deeper dive onto ratio spreads. Maybe not just put spreads, but 1x2 call spreads. That could be selling one and buying two. That's usually the call spread way to do it. The other way is kind of just infinite risk. But maybe we should revisit ratio spreads down the road on the show in more detail. Let us know, listeners, if you are intrigued by such a concept. We can see if we could investigate it further for you. Speaking of letting us know, let's go out to YouTube land. This comes from John Smith. A lot of you listening on YouTube these days. However you get the show, we love you all out there. John Smith, he commented on our boot camp episode 224. Let's get crazy with covered strangles and straddles. I mean, that's not crazy. I don't know what is, listeners. He said, hey, great episode. Thanks for sharing. And you're welcome, John. And everybody else who takes the time to listen on whatever platform, even though a lot of you are starting to come in via YouTube. We don't obviously turn it into a video show for YouTube. Our service just takes the audio, repurposes it with a nice static image there for you to listen to it on YouTube. But a lot of people use YouTube just to listen at the end of the day anyway. So if you want to go in and enjoy it via YouTube, have at it just like John and everybody else is doing out there. Let's go to this question next. Max Halvis. Max wants to know, I've been overwriting calls in Ford for the last few months. I'm kind of wondering sometimes if I'm spinning my wheels. What is the lowest amount of premium or what percentage of income do you require to sell covered calls? Yes, we've heard this complaint before, and it has come in Ford before. Ford, not known for being, shall we say, the sexiest, most volatile of names that translates into a lot of covered call premium. As we're doing the show, listeners, Ford hanging out right around $12.36, up about 30 odd cents or so on the day. Obviously, back in the go-go days of 2021, when Ford was kind of acting like a meme stock, they had that stake, and I believe it was Rivian, and it was shooting off to the races. And then we started to see a lot of bids starting to percolate into that upside call wing. And then covered calls in Ford were probably the best they have been, and certainly that I can remember. Maybe there was a period 30, 40 years ago where they were really attractive. But as long as I've been watching Ford, that was probably some of the best covered call trading I've ever seen out there because the call wing was ridiculously bid. We saw people diving into the 25s for size, buying 25, 30 verticals, 30s outright. You could sell pretty much any strike to the upside and get a fair amount of premium for it. Those days are kind of behind us now. They have unwound that stake in Rivian. They also, obviously, the 2021 go-go meme stock days are a little bit behind us as well. So I understand, Max, if you're starting to maybe rethink some of your covered calls. Dan, when you're over there, I know you have your income systems and everything over there at MTM. But when you're doing this, when you're crunching the numbers for covered calls, Max wants to know, what is the lowest amount of premium or what percentage of income do you require to sell a covered call?
Yeah, I mean, covered calls is one of my things. And I do own some Ford in my wife's IRA. And honestly, I'm not writing calls in there yet. I'm watching it. And if it goes up a little higher, closer to the high teens, 18, 19, 20 range, I'm going to jump back on that bandwagon because I love writing calls on stocks like Ford. And it's not as straightforward an answer as you might think and as your question states, because if it's in something like spiders, like a very broad-based, thus because of diversification, lower volatility name, then I might be happy, depending on the market situation, I might be happy on getting 0.65% of the stock price. But if it's a higher beta stock, and or if the market is a bit more volatile, like we have the VIX at about 21 today, it's going to have to be more like 1.1, more 1.2% of the stock price is what I would require for the call. But that's still an oversimplification too, because then you have to be strategic about it, and you have to say, okay, well, like I don't get enough in this 5-day option. What do I get in the 12-day option? Okay, that's better. But wait, is the what's 12 plus 7, 19-day option better? And then, is it better for me to sell 3 of the 5-day options or 1 of the 19-day? So there ends up being a bit more to it than that. And hey, that's why we bone up on the Greeks, and that's why we practice with our covered calls and get really good at them. But anyway, that's part of how I look at it. I hope that helps somewhat.
Dan, you don't want to go out and sell the June 18s in Ford for 4 cents? What's wrong with you?
Maybe 40 cents once it gets a little higher.
It doesn't excite you at all, the 4 cent? Yeah, there's not a lot of. I was looking at the call wing while you were talking here, and yes, there is not a lot of juice out there in Ford right now. And Ford's also one of those names that has kind of been beaten up a little bit. So if you're owning it, Max, you have to ask yourself, why are you owning it? And if you want to get some appreciation, you make sure whatever level you decide on the covered call, that's like selling the short put. You have to be comfortable buying the stock there. The first bit of analysis you have to do with the covered call is, are you comfortable letting the stock go there? And right now, for any call strike that might give you any sort of really meaningful amount of premium, you may not be comfortable letting the stock go there. You may want more out of it. So that's the first bit of analysis. And if you're like Dan, sounds like Dan's in that boat. He's not comfortable letting his stock fly down here. He wants a little bit more from his Ford. If you're in that boat, it's okay to not sell a call. It's okay. We're not here to tell you have to trade every day all the time. If it's, like I said, 4 cents, that's not worth doing. Obviously, you can play around with it and look at different strikes and look at different expirations here. Let's go out to March instead. Let's look at the Marches here. These are not getting a lot of juice here either. You got to sell pretty much an at-the-money call. That's effectively you're letting your stock fly right here plus your 40 cents. So I don't think that's really exciting for a lot of people. So it is okay sometimes to trade or not to trade. It is okay that the answer is not to trade there, Max. Let's go out to Caleb. Caleb has a good question to take us home here, Dan. Caleb wants to know, how often should I realistically be trading options to be profitable over the long term? I have a day job as a teacher, so I don't really have much time to check the markets during the trading hours. I don't mind checking and entering orders after hours and before the open, though. Is it realistic to think I can enter into a covered call writing program given my time limitations? Well, short answer, yes. I mean, your scenario is almost tailor-made, Caleb, for a covered call type program. The beauty of covered calls is that I hate to call them set it and forget it because I think you should babysit them more and watch them more. But a lot of advisors and asset managers use them in that exact purpose. They find the strike, they write it, they set it and forget it, they move on to their next trade. If the stock gets called away, they rinse and repeat. They decide what to do at that new level. So you could easily do something like that. You don't give us much more information in terms of which underlyings, what kind of durations. You don't say if you want to dive into this 0-day stuff everyone's talking about, then yeah, you probably want to be a little bit more glued to your keyboard. That's the downside of the 0-day. It's a very hands-on approach. But if you're going to go out, let's say a month or two or even longer, and you're just going to write a covered call at some level where you don't mind selling a holding in your portfolio, sure, that's perfect. That's tailor-made for a limited time use case like yours. Dan, I'm sure you have a bunch of mentees who've come through there at MTM who are in this exact same scenario as Caleb. What do you tell them?
Well, I mean, as far as covered calls goes, that is the lowest effort thing to trade, I would say. Like that is covered calls trading is 90% intended to be part of your long-term investing plan. I mean, I will trade them on trades sometimes, but mostly it's on investments. And sure, sometimes those covered calls are 3-day calls or 1-week calls, but I'll research it maybe once a week and I'll put on the trade and I'll set my plan and I'll know what my plan is and I'll just bop in there, once. It doesn't even have to be once a day, but I usually do once a day because I'm always in front of my computer. And say, okay, where are we now? Okay, we're not up at the strike price. It's going according to plan. Do nothing. See you tomorrow. The next day, okay, oh, look, I have to do an adjustment. I had that plan. Here's what I'll do. Boom, done. Like you shouldn't spend more than 3 minutes a day trading your covered calls, and maybe a good half hour once a week researching them. And it can be on the weekends just to get a pretty good idea and just make some notes of what you're going to look at on Monday morning.
So yes, Caleb, you shouldn't feel bad. You have one of the ideal strategies for your time frame. Like I said, if you're going to get more active, you're going to start getting closer dated stuff, maybe 0 day, then you're going to have a little bit more time on your hands than it sounds like you do. But for, just your basic covered calls, perfect for your time frame. Got a question, listeners, about what's going on in these crazy markets or in volatility in the world of options? You know where to find us here, just like Caleb and Max and John and Alan and Yield Hunter and Ali John from Germany and everybody else did this week. A lot of different places do that. At Options is one of the easiest places to go, I should say, on most of your major social media platforms. You can reply or DM us there. Questions at theoptionsinsider.com. Also works if you head up over there to the pro, theoptionsinsider.com/pro. You can, of course, ask your live questions for this and everything else we do. We also have our great pro Q&A sessions that you guys can be a part of. And, of course, you can join, Stegosaurus, who won the pro trading crate over there. Theoptionsinsider.com/pro is the place to go. And, Mr. Dan, where should they go if they want to do a little bit of the old MTM learning, sir?
Sure. Make your way on over to markettaker.com. 2 T's in a row. Second T for Theta. And we'd love to hear from you. Yeah. We love chatting with listeners and helping you out however we can. Check out our daily videos and anything we can do to help.
I'm glad to see you have embraced that branding advice we've given you there. Second T for Theta over there at markettaker.com. Listeners, that's going to do it for the live stuff today. Back again tomorrow, listeners, for episode 2 of the Option Block, as well as this week in Futures Options. Friday, back again for Volatility Views, and then after that, exclusively for you pro folks for Options Oddities. Then back again next week, kicking it all off again on Monday with episode 1 of the bi-weekly extravaganza known around the globe as the Option Block. Of course, Crypto Rundown after that. If you're into crypto, check out that show. We had a fascinating show just this past week, crunching some great data on crypto options and some interesting trades. What really works when you're trading options on Bitcoin and ETH? Check out that show. We got the data for you there. And then, of course, Tuesdays are our great pro Q&A days, all the way back to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.